This second move by China in as many days. Were you surprised that they took that action again?
Well, look, I mean, any country that's been through this before, whether it's emerging markets or any other country, at the initial phase, you're going to have to move in a number of steps. So it's very difficult for the market to gauge exactly what's happening. And the market's trying to find its equilibrium while the central bank is trying to move its fixing. It's an impossible game. And at the end of the day, either you let the exchange rate become more flexible and let the market decide where the equilibrium is, or the central bank has to intervene on a large scale.
So the global markets obviously had a reaction. Do they believe Beijing when it says that the yuan's decline was a one-time event? This is a one-off.
I think that essentially it came as a big surprise for everybody. I mean, the whole market's in a holiday-induced summer liquidity low. So the events like this will be, in any case, big market movers. So at this stage, it's a really big market mover. So I think the question is, as you say rightly, is whether the market believes it. I think in this sort of situation, you need about several days for the market to acquaint itself and to understand what the central bank is doing, and for the central bank in turn to understand what the market expects from it. It's all a circle, a vicious circle at the moment, but it can become a virtuous circle depending on what the central bank decides to do.
So it seems the consensus is that this move by the Chinese was in fact to help its exporters, but with global demand as weak as it is that even possible?
Honestly, I don't really think that that is the story behind the whole thing. We know that the Chinese economy is coming down. We know that population growth is about 0.4% annually now, way below. So growth, actually, if you compare it to other emerging market countries or countries in general, should maybe be about 5.5%, 6%. But I think the Chinese authorities don't really know exactly where the threshold is on the growth side, on GDP growth side, that will start to hit unemployment. That's the most important thing for them. And the second thing is that the central bank itself, and we know this, the authorities have made it very clear in the last several months, want to join the special drawing rights of the IMF. Now, we have 4 developed markets, so-called developed market currencies in that SDR. It would be the first emerging market currency to join. And I think this is very much more political than it is about exports and GDP growth and everything. China wants to join the SDR, and this is a big, big political move, and it's also a big political message coming from emerging markets to the whole world.
What about the message from the International Monetary Fund to China, then? Is the IMF going to continue to snub the yuan as a reserve currency?
I think Mrs. Lagarde has been actually very constructive on this, if you look through her comments of the last several months. It's very difficult for the IMF itself. They came out with this report early August, maybe some suggestion of delaying the decision until 2016 to provide everybody with a bit more time. After all, this is the largest test case we have had of a capital market liberalization in emerging markets. The scale is just huge. And I think essentially, let's not forget, it's the IMF board, which in other words is international governments who finally decide whether the yuan joins the SDR. And after all, in that board, the United States has a voting right of about 17%.
Sir, let's talk about exposure, specifically among some Latin and South American countries. You have Brazil, Peru, Chile. They all have a lot of exposure to China. Talk to us about the reaction that they are having in their markets to the events in China of the past couple of days.
Well, I think essentially, if you look to LATAM, the one currency that really has the least exposure, if you like, to all of this, in other words, low oil prices, any deflation story, China, the one currency that has the least exposure is the Mexican peso. Now, if we leave the Mexican peso aside, as you mentioned, Brazil really has exposed itself to China, #1 trading partner. Why? Because of the soft commodities that it exports there. Unfortunately, we haven't seen the necessary diversification of the Brazilian economy in the last 10 to 15 years. It was easy to export on the soft commodity sides. Peru, Chile, more on the commodities. As you know, copper, if Chinese demand for copper falls, so does demand for Chilean exports. So those currencies are really the ones that you have to look out for. And Brazil has its own domestic problems at the moment, which it has to deal with. So from that point of view, we're very cautious on Brazil.
If China's economic growth was not at an annual rate of about 7 or 8%, are we even having this conversation?
let's put it this way. I mean, there are a lot of debates going on around about what Chinese growth really is. Some people have their own estimates of a 1.5% to 5%, depending on what factors you look at. I think essentially, if we had 8%, 9%, we wouldn't obviously be sitting here. That's very clear. But the one thing that's very clear is that China, let's not forget this, China is the #2 economy worldwide, and they really want to place themselves politically. This is about the BRICS countries, the BRICS global bank that they're developing now. It's about the development of emerging markets in the last few years.
Sir, I have about 20 seconds. I have to ask, the moves that we saw this week out of Beijing, will they complicate the U.S. Federal Reserve and its decision on when to move on interest rates?
Mr. Dudley made a point today about that affecting global demand. So definitely, we heard Mr. Bernanke back in 2013 talking about the fact that they have many economists watching emerging markets. So it definitely is an issue. Will they delay? Let's see what the reaction is over the next 1 to 2 weeks. But it's definitely something worth considering.